Hey everyone, we are here with another episode of About Crypto with David Nage. How's it going, David?
I'm good, Cody. How are you?
I'm living the dream just here in New York with you as well, and just living through the pandemic. So
It's
you
been a
know
weird
what,
time.
dude, it's really strange time, man. And I'm over it. I'm hoping all these phases kind of blaze through, and we're back to some sort of normalcy.
I'm
So,
waiting for phase like 2.5 or 2.25.
right?
Not going to three yet, but we're like quarter step.
Yeah, quarter stepping is we're getting there. So hopefully soon. But you work in crypto and you're the principal at Arca. So my question for you is, how did you get into crypto?
So it started about 5 years ago. I came from the family office world, and for those that may not be familiar what a family office is, it's effectively an institution, a grouping of folks that help manage a wealthy family's affairs. And I've been focused on the investment side, always focused more on early stage technology investments. And then around 2015, one of those family members made an investment in one of the first Bitcoin funds. And 2015 was an auspicious time within Bitcoin's history. It was a time where we saw the Silk Road and we saw Dread Pirate Roberts get arrested. We saw the DAO hack. And so it was a lot of negative headlines, whereas we don't see as much of that these days. We hear about like Secretary Mnuchin and this new book talking about how he's going to shut down Bitcoin, but we don't necessarily hear about like the Amazons of the underworld that are using Bitcoin. So it was a scary time, and so I had to spend a bunch of time understanding what Bitcoin was, and I spent about 6 months. I taught myself how to code, which is not necessary. I wouldn't say it's necessary for anybody, but I always like to say if I'm going to a foreign country, I at least want to be able to ask someone if I go to a restaurant where the bathroom is in their own native language. It's just kind of a thing where it's like I don't want to sound like an obnoxious American tourist. And so I taught myself code just so I would understand the nuances and when I would speak to people who are obviously much more engrossed in the space. And so it was about 5 or 6 months of that time. And that really led me to the belief that distributed and decentralized systems were going to have a massive effect on society, and they were going to have a massive effect on economic systems. That the current systems that we have today are built on centralized locations, and those centralized locations are fallible, that they can be attacked, that user data can be easily taken away, and what I call our digital selves, us, what we put on the internet, can be taken away and sold. And so that really led me to a deeper belief that this was going to be bigger than just Bitcoin, that it was going to be something massive. Obviously, I'm a massive proponent of Bitcoin. I think that in today's time, what we're dealing with, unprecedented levels of financial and monetary stimulus from the Fed, with trillions of dollars being printed, that Bitcoin's kind of purpose is going to be even greater than it was 5 years ago. But there is bigger things out there. There's a billion people who don't have any kind of identifier. They don't have a social security number, and they can't get into the banking system. Can we solve that through distributed and decentralized architecture and systems? We can, we're starting to say. So it really led me to a greater belief that this was going to be big, that it was more than just one element. And so that really led me down to the path to really focus in on it. And then in 2018, I had thrown my first family office conference called FO256. I saw hundreds of people gather together and coalesce around this, and I said, okay, I think I really have to, kind of do this full time. And so I took a garden leave for about 4 months. I left the last family office I was at and met with a bunch of funds, met with a bunch of companies in the space, started writing, started my podcast, Base Layer. And I met the folks at Arca, and we really meshed. We believed that there was something great happening here, that to get people on board and keep it, and not just keep it within a sandbox, but to grow that sandbox to hundreds and thousands of investors and people out there, that we really needed to have something that felt institutional, that felt familiar to them, that they understood, that people who would talk to them wouldn't just talk to them in technological verbiage, that they would talk to them in their own language. And so it's been a great pleasure over the last year and a half to help build that company.
Yeah, that's awesome. What do you think about Goldman Sachs saying Bitcoin is not an asset class?
Well, I disagree. I think I've spoken to enough people at Goldman to understand that it is a multifaceted, very large organization. So there's one department that has that sentiment where there are other ones that are not. There have been people at Goldman for the last few years that have been actually trying to build businesses there. There are people who have left Goldman, who have gone to other companies within digital assets, who really understood it while they were at Goldman. And so there are many people, in my opinion, that understand it there. But unfortunately, this opportunity that arose about 2 or 3 weeks ago was really missed. I felt that it was rushed. I felt that they used a lot of the narratives that were from about 2016 or 17. I don't think hearing about ransomware and about the types of negative things that happen are really germane to the conversation today. They were part of the history of digital assets and Bitcoin earlier on. And as I've said this before, if you look at the history of technological innovation and adaptation and adoption, unfortunately, the worst people in the world are the first ones that take advantage of that. They use it to their own exploits. And so that was part of the history, and it has grown, and we're starting to see it come to a more of a maturity level today, and more people that are using it for the right reasons versus the wrong. And so I felt it was unfortunate. It was a misstep on their behalf. But again, from my conversations with folks there, I know that it was a department. It's not the entire kind of sense of the entire of the firm.
Awesome. Thanks for that. And also, are we seeing a lot of institutional investors getting involved with digital assets, or has it come to kind of slowed?
And thank you for saying digital assets. It's something that myself and people in my firm also believe that we need to kind of move this kind of narrative from crypto to digital assets. Most of the things that are out there, aside from Bitcoin obviously is has semblances of a currency. It's a medium of exchange. It's a store of value. But the majority of the other things out there are actually building networks. They're helping power distributed and decentralized networks to do things, whether it's decentralized finance, whether it's gaming, whether it's sports. There's different adaptations there. And so digital assets is really important. And so, yeah, I would say on the grander things, just getting back to the question again, what was, you wanted to ask kind of, what was the question again?
Are institutional investors flocking to digital assets? They are.
What has happened over the course of the last few weeks has been really monumentous. A very, I guess you can almost say, legendary investor, Paul Tudor Jones, co-authored a paper with Lorenzo Giorgiani, who was the deputy director at the IMF for about 15 years. These are not, quote unquote, crypto people. These are not anarchists. These are not people that are trying to burn the system down, which was what a lot of people were associated with this whole, kind of revolution for many years. I think you can obviously not blow things up. You can actually have a sloping change of progression, an arc of progression. Josh Wolf and I had a great podcast that I'm releasing next week. He talked a lot about arcs. There's different arcs of progression here. And so, I think what we're seeing right now is that letter really had a massive effect on a lot of institutional investors. I'm talking to big, family offices every single day who are now questioning me. It's no longer why would I do this? It's how do I do this? How do I actually get into this world in a way that's safe for us, in a way that's compliant for us, in a way that we feel safe, that we can sleep at night? And I know that sounds kind of silly to a lot of people who may be listening who have been in digital assets, who have been in Bitcoin for a number of years. But when you're talking about someone else's money that you're investing on behalf of, the conversation is different. It's not just your assets, it's someone else's. And with that is something called career risk. If you put your client's money into something, and then all of a sudden you can't get the keys, or you don't remember the keys or the seed phrase, and you can't get into it, and you're screwed. That's something that doesn't really mesh well with people that are investing millions and maybe billions of people's money on behalf of them. So it's a different dynamic, but again, I would really emphasize that over the last 3 to 4 weeks, especially after that letter, things have dramatically changed. There has been a real interest spike. People are taking this much more seriously. They've seen the actions of the Fed that we talked about before with trillions being printed, and they are really trying to understand, can Bitcoin and digital assets be a way to have kind of removal from the financial system. I always like to say it's untethered. Can this really be something where there's, kind of untethered exposure to an asset that can help our capital grow? And so it's been a really interesting time.
Awesome. Thank you again. You're a wealth of knowledge, and my audience is going to get so much from this. And yeah, where can people find you?
Well, they can find me on Twitter. David J. Nage is where they can find me. I always love getting into conversations there and having DMs there and talking to people there. That's a great way to find me, first and foremost. And then if anyone's interested out there or want to learn more about the firm I'm at, it's the website is simple. It's ar.ca, and you can read our blog posts. You can check out everything else. And then, of course, if they also want to check out podcasts and they like that, my podcast is Base Layer. You can find that on iTunes, on Spotify, which apparently now is taking off because I think they just got a Kardashian and Joe Rogan too. So my podcasts are on Spotify, and they always have been. And any other places that you usually will find your podcasts.
Awesome. Thanks again, and have a good day.
You too, Cody. Take care, all.
Bye.